Hello and welcome to Halftime Report. I'm Ekta Batra. With me is Mangalam Malu. Well, it's turning out to be a session where we are seeing a little bit of trepidation now coming into the markets. We did see an FII net sell figure yesterday. So we have the Nifty, which is down around 100 odd points at this point in time. We have the Bank Nifty, which is correcting around 0.4%. So maybe there is now some concern on the fringe, which is coming through with regards to what the FOMC could do when they meet next week, where the dollar index could eventually move to and what the impact could be for the Indian markets as well. So the mid-cap index just about holding its head above the water, higher by around 0.14%. A lot of stocks in focus, Mangalam. IT seems to now be seeing a little bit of a downtick again. So we have Infosys, which is now down around 2.8%. Hindalco not doing too great either at this point. Hindalco from the metal space is your top loser on the Nifty.
Yes, we do have a lot of stocks in focus. In fact, the ones which are auto and auto related are the ones which are buzzing. In fact, just the last few minutes, we saw a big spike on MRF. A lot of these tire players, actually, CH2 has moved to the high point of trade. The street is betting on domestic consumption recovery, which includes the autos, etc., and auto ancillaries, as against export-facing sectors, which is why we're seeing some weakness in IT, etc. But be that as it may, we do have a lot of stocks which are buzzing around. And one of them is CCL Products on our radar after a big move that we've seen over the last few trading sessions on that counter. Yes, it is slightly muted in today's trading session, but as you can see from the chart as well, dips are being bought. The company has significant capex lined up for the future, and it also raised its guidance after the first quarter from 15 to 20% to 20 to 25% for its revenue. What are the triggers going ahead and how's business like now? We do have Chala Srisant, who's the managing director of the company, joining in. Thanks a lot, Chala, for joining in. You know, you've always said that commodity prices don't affect you as much. What the triggers for the company going forward are the significant capex that you have both in India as well as Vietnam across verticals like spray dried as well as freeze dried, and the India business as a whole, the Continental Coffee branded business that you have. With all this capex, can you give us a sense of what comes on stream by when? And what is the kind of revenue pipeline that you have for, say, the next couple of years once the entire capex piece is over?
Last year, we've come online with 3,500 ton capacity in Vietnam. And this year, we are enhancing the capacity to 30,000 tons in Vietnam. By next year end, we are looking at adding another 16,000 tons in India. So that will make the overall capacity about 71,000 tons by FY24.
Okay, all right. So that's on capacity utilization. But you seem to be quite optimistic about, demand, considering that you've raised your guidance to around 20 to 25%. So give us a sense in terms of where exactly are these demand drivers coming through, and do you expect it probably sustaining?
Yes, so we have been expanding our presence across the world for the last 25 years. We've built relations in various countries with multiple customers, and we are seeing a lot of volume growth with our existing customers itself, with our existing brands that we are already supplying to. And we're also adding some new customers every year. The last couple of years have been challenging, but thanks to the partners and the relationships that we have built, we are quite confident that we can keep increasing volumes going forward as well.
Right. You know, Chala, one thing that the street would want to understand is that with this increased capacity by FY24, at what point does capex take a pause for you? Because it's been the last few years since, you've increased your capex allocation for a very long time, and as a result of which your ROCEs have, or return on capital, has taken a bit of a hit. At the same time, we've seen your free cash flow turn negative to the firm because of the capex that you've incurred. So at what point do ROCs begin to spike? At what point does the firm actually have some free cash flow?
So to be very frank, as a company philosophy also, we wanted to utilize our funds in a much more efficient manner. We are not having extra free cash flows at our end also kind of symbolizes that we're not putting our money to work very efficiently. So we've been planning our expansion also in such a manner that Our dividend policy will not change with the 30% dividend year on year. We are doing a combination of debt plus equity in a manner so that we have optimal utilization of our cash flows.
Okay. I was just going through your conference call transcript where you have indicated that your volume growth was around 25%. There was pricing growth of double digits the quarter gone by as well. Are you in a position to probably hike prices further? Do you see enough demand irrespective of what's taking place in the commodity cycle for you to possibly pass it on and see pricing growth? Give us a guidance on both of these parameters.
Yeah, so our business model also is such that whatever the coffee prices, frankly, doesn't make a difference for us because we work on a cost-plus model. That's the model that we've been following for more than 25 years. And our growth comes because of the volumes and the new customers that we are adding all the time.
Right. You know, as far as the domestic business is concerned, Continental Coffee, that is, you've scaled that up from, I remember you talking about 150 crores and then went all the way up to 200 crores in FY22. You've guided for 35 to 40% this year as well. What is your long-term prognosis of how big Continental Coffee itself can be in India? What's the kind of investment that requires in branding, distribution, etc.? And at what level will it start to be, big accretion? It will be accretive to your earnings going forward.
So, to be very frank, at this particular point in time, the guidance given to the team is to focus only on the volume growth and to build a stronger brand that is likely to sustain in the long run. We are very frankly going up against big MNCs within India. And it's not that easy to establish a brand anywhere in the world. So we have taken a conscious call that we want to build a very sustainable brand, which is what we are doing. Our core business itself is currently growing at a very healthy pace. So there's no real dependence for us on bottom line contribution from the domestic business at this point in time. We've already broken even last year itself, and going forward also, we are quite confident that the same level of growth that we want to sustain, we will have to invest a little bit more to grow faster, which is what we are doing right now.
I wanted to know actually as a follow-up, how much are you looking to invest in this? And when you say you want to grow in terms of volumes, what is the size you're looking at? Because not only are large MNC players in the coffee space, we do have a lot of these D2C players coming in and eating into the lower end of, by lower end, I mean one end of the market as well. So in that, what is the money that you've earmarked or have planned to, invest in this?
So over the last couple of years, we have invested almost about 75 crores over the last 5 years. And going forward also, what we are doing is whatever is the revenue generation that is taking place, we are planning on reinvesting that additional profits into growing the business. That is our objective. So around, you can take an average of maybe 50-20 crores year on year is what we are planning on reinvesting in the business. And even after this reinvestment, we will be still at a break-even stage.
Okay, well, we're definitely discussing too one of the favorite things that I consume, which is coffee. But the other thing which I'm really interested to know about is your plant-based protein. You've just about launched it. It's a test-based, launch in 3 cities. How is it doing?
So the response has been really good right now. We've done a lot of sampling activities. People are quite surprised. They're saying that as a product, they're not able to distinguish between meat and this. So it's a lot of positive response that we have gotten as of now. There's a lot more awareness building that needs to be done. As time goes, as this category grows, while more awareness comes, we are confident that the volumes also will come.
All right, take that point, Chala. Always a pleasure speaking with you. And we always come out, more knowledgeable about the coffee sector after having spoken to you. So maybe it's literally coffee for our knowledge itself. That's about CCL products over the last, today of course it's flat, but if you just take a look at it over the last few months, we've seen a big rally on that counter. But let's move on to a